Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Monday, March 15th, 2021, and I am pre-recording this Trading Places Live for Tuesday, March 16th. Futures currently are mixed, but we are seeing strength this evening on the NASDAQ. So NASDAQ showing a little bit of leadership after a little bit of a turnaround during the day on Monday. We saw the NASDAQ lagging early in the day, but it did come back and lead. So we're seeing that carry over into futures. We've got Dow Jones futures down, NASDAQ futures up, S&P closer to the flat line. We'll see how this carries over into Tuesday action. Got a few things on the agenda for today. First, we'll start off with that daily market recap. Then we'll get into talking technically, chart breakouts, industry analysis, earnings spotlight, and 3 you must see. Before we get into any of that, I'll take you over to earningsbeats.com. Love to have you subscribe to our free Earnings Beats Digest newsletter. You can just type in your name, email address, hit that subscribe button. We'll get you set up. This is a free 3 times a week newsletter. There is no credit card required. You can unsubscribe at any time. And normally just talking about relative strength, earnings, those types of things, maybe an occasional breakout. But we do try to make it very educational. So I think you'll enjoy that. Or if you'd like, sign up for our no-cost trial, 30-day no-cost trial. You will be charged $7 up front, but it'll be refunded to you within a week. So literally no cost over 30 days. And you can check out an entire service. I like to view our service as a research and educational platform. And if you're already a StockCharts member, extra or above, you can download a lot of our work. We have chart lists that we organize to keep track of a lot of the research that we do. And our members are able to download that right into their individual StockCharts account. So pretty cool setup. Our portfolio performance, which has been outstanding since inception on each of our 4 portfolios. This quarter has been a little rough, but we have made up a lot of ground. Income portfolio having a great quarter, one of its best, easily outpacing the S&P 500 this quarter. Our other 3 portfolios are down versus the S&P 500, but much of that is because growth stocks have been underperforming. We do have a number of growth stocks in those 3 portfolios, but they have been making up a lot of ground. Even though growth stocks relative to value have not really jumped that much, our leaders have done extremely well in coming back. So we're pretty excited about that. This quarter, when we talk about this quarter, you can see the quarter for the portfolios is February 19th to May 19th. And then down below, we've got our ETF portfolio, which you can see we are leading also since inception versus the S&P 500. And this quarter, we're actually leading despite having a few of our funds or a few of our ETFs being in that growth area. So if you'd like to join us, we'd love to have you. Again, give us a shot, no cost 30-day trial. All right, let's take a look at what's going on in the market or what went on in the market on Monday. Dow Jones Industrial average up 175 points. Just recently went through 32,000, and here we are knocking on the door of 33,000. I think we're going to go through. I wouldn't be shocked to see 34,000 not too far down the road. We do have a negative divergence on the hourly chart on the Dow, so short term might be a little, dicey, but I'm talking about just maybe over a couple of days. I do expect once we get through options expiration, I would expect that the Dow is going to continue to do very well. S&P 500 up 25.5 points, so we're roughly 2/3 of 1%. Only 32 points away now, 31, just a little over 31 points away from the 4,000 level on the S&P 500. So that's less than 1% now. That could be a record that we see sooner rather than later. NASDAQ bouncing back nicely, as I mentioned at the top of the show, up 140 points on Monday. We were down earlier. The good news is we've gotten back above both of those moving averages. So it looks like we're trying to make a push here. I think the next day or two could be really critical in the near term because we are battling these moving averages. Mid caps up 1 1/3%, up another 36 points, another record. Small caps pulled back, but like the Dow Jones, small caps do have a 60-minute negative divergence. We were down just slightly, down less than 1 point. but this has been an index that's been doing extremely well. AD lines on all of our major indices turning back up again. I think this is really bullish action. As far as sectors go, discretionary stocks back on top. And I'm going to talk about some discretionary areas in just a few minutes, but discretionary back above its key moving averages, not too far from that high now in February. So that's all good news if you follow the discretionary areas of the market. Utilities bouncing back nicely, as are real estate companies. Real estate actually breaking out above that late February high. Utilities still a little bit below the January, February high, but coming off of the recent lows. March tends to be a good month for defensive areas, and we're seeing that in both utilities and real estate so far this month. Technology, which has been under some pressure over the past month or so, like consumer discretionary, did manage to get back up above both moving averages. So we've got a test going on here for technology, but if we can continue to see strength from here, that would bode very, very nicely for the technology area and for the NASDAQ more specifically. Energy was weak on Monday, losing more than 1%. This has been a great area of the market. The PPO looks strong. If we do pull back, I'd be looking for support at that rising 20-day moving average, which is just above $50. We'll see if we get there. All right, moving on to the 10-year Treasury yield. I want to mention that there are a number of economic reports on tap for Tuesday morning. February retail sales coming out. January, if you recall, we saw a rise of 5.3%. February's retail sales, though, expected to drop 0.5%. We'll see. If we strip out the autos, February retail sales expected to drop 0.1%. January was up 5.9%. So we're looking for a pretty big pullback in retail sales for February. February industrial production expected to rise 0.5%. January rose 0.9%. And then February capacity utilization, 75.7% is the estimate. January was 75.6%. So a little bit of an improvement there. January business inventories, of course, we're looking in the rear view mirror here with January numbers. But the business inventory is expected to rise in January 0.3%. December rose 0.6%. And then the last economic report, March housing market index, expected to come in at 83. February was 84. So we're looking for a little pullback there. As far as interest rates go, and we do have a Fed meeting going on, I think we've got to keep in mind that we've had such a huge move to the upside here in the 10-year Treasury yield. And that, I think, is going to continue over time. I don't know that we're going to see it go straight up from here. I'm still expecting that we're probably going to see a pullback at some point, maybe test this rising 20-day moving average. That's something I certainly would be thinking about. And of course, Wednesday, the Fed's going to come out and make their policy decision. So that's when we'll get the announcement, 2:00 on Wednesday. I would be really shocked if the Fed changes much of what they've said. I think they're still going to be a little cautious on the economy. I think they're going to say that inflation, while increasing, they believe is transitory. So I don't think that they're going to be looking for anything major there. And I think they're going to say that, hey, we're fine with inflation going up a little bit. And they've talked about the fact that prices decreased in March, April, and May last year. So when you remove those out of the equation and you put in the new March, April, and May of 2021, you're going to be changing the picture. The inflation numbers are going to go up. The headlines are not going to be good. But listen to what the Fed says, because the Fed, I believe, does have a good handle on this. I think they want a little bit of inflation. They've said that. So they don't mind going a little bit above their 2% target. I think they're going to continue to remain cautious on the economy, expecting, maybe they'll show a little bit more, based on data. Maybe they'll be a little bit more upbeat, but I still think they're going to have a cautious tone. And as a result, I don't think that you're going to see much of a change in terms of their interest rate policy going forward. That's just my opinion. That will have a major impact, not only on the bond market, but depending on which way the yields go. We've had some craziness with growth stocks here of late. So depending on what the Fed says and how the bond market reacts, that could have an impact for sure on growth stocks. All right, let's keep moving on. I want to move into, let's do a little talking technically here. Now, I always talk about IWF relative to IWD. So I thought what I would do here is just look at the absolute charts. Forget about the ratios for a minute. IWF, and I think it might even be a good idea to switch this PPO to maybe an AD line. Let's just see what the AD is doing. You can see on the IWF, see how we moved up and then came down here in February through the first week of March. With that move down, AD line barely budged to the downside. And that's because if you look at these candlesticks, many of them, even though we went down, we closed at or near the high. Half of these candles on the way down were fairly bullish candles. So I think that there's still accumulation going on in growth stocks. I don't think this growth story is over. I know a lot of folks thinking it is. I don't believe so because I don't think interest rates are going to go shooting up. I think they'll be higher, but I don't think that they're going to go shooting up. So I'd be a little careful about throwing growth away just yet. There are going to be some inflation scares over the next few months. So there's going to be volatility. There's just no getting around it. I wish that they would not be volatile, but they're going to be volatile. And we've seen it recently. We saw it back in September with this move down. And by the way, when the IWF fell back then, a number of these candles were pretty bullish. And the AD line, very similar to what we're doing right now, the AD line really didn't go down. And after 2 months of consolidation, the IWF was back on its move to the upside. AD line followed suit. So I actually still think the IWF here looks pretty good. All right, I'm going to go through now, and I want to go into chart breakouts. Got a number of stocks here that I want to go through and talk about. These are all stocks that set 52-week highs today on Monday. And I really like, as we go through these, I think you're going to see some common themes here. Number one, the AD lines are going to be fairly strong on most, if not all of these. Some of these have gone through periods of consolidation. I really like it when we consolidate for a few months. That normally will take the relative strength down for a period of time, because when the stock hits its high, this whole move here, ADNT, Adient, throughout that whole move, you can see it was outperforming its peers. But once it topped and started going sideways, it started losing relative strength. Well, now here it comes rising again, breaking out to a new high, and look at the relative strength now all of a sudden come back to life. So I really like that. I like the volume trends here, strong volume on these moves to the upside. And like I mentioned, AD line looks strong. When I start looking at stocks like these, I don't think you can really go wrong. I'd prefer to get them on a pullback. Some of them may pull back, some of them may not. When you get into leadership positions, a lot of these stocks just keep going, especially if institutions are accumulating or have already accumulated. All right, let's take a look at some of these other stocks I have on this list for you. So how about Acuity, AYI? Acuity Brands, you can see that AD line's been moving up. Look at the last 3 or 4 days. Nice break after sideways consolidation, volume picking up, and there's your relative strength. Looks like it's moving. It's pretty close to the high that we set in January, which is the highest we've seen all the way since June of last year. So I definitely think AYI is improving. Like this move here. What you're looking for on a pullback, any pullback on these stocks, I think the rising 20-day moving average is something to keep an eye on. And if it just broke out, look at the area of the breakout. So in this stock, AYI 131, 132, something like that, where that high was, we broke out. Any kind of pullback back down to the 20-day and or that prior high, I think makes sense. Buckle, BKE. Once again, AD line soaring, nice move up, looks like a little cup, couple days a handle, and then we break out. Volume pretty good there. And on a relative basis, look again, relative to the apparel retail group, we were at a high at the end of January, right when we set the price high. Go through all this consolidation, we lose a little relative strength. Now we're breaking out, and we're starting to see that relative strength line turn higher. So I think this is a pretty nice looking one. How about CAL? This is another one in apparel retail. Once again, move up, sideways consolidation, breakout with the AD line strong. Here was that relative strength moving up, but while we consolidated, we pulled back. Now we're moving back up near highs again. So this is another stock I think looks good. How about cars.com, CARS? AD line at a new high. All of these candles off the 20-day recently, breaking out now to a new high. Relative strength versus software. This is one of the better performers in software right now. CYH, this is Community Health Systems. AD line all of a sudden picking up in a hurry. Last couple of days, very strong. Nice candles, nice volume, relative strength breaking out. The recent breakout here, $11. And this high over here was $11. So that just tells me you get a pullback of about 10, 12%, get down closer to that $11 area. I think it'll start looking very interesting on a pullback there. How about Eventbrite, EB? So this is in the internet space. Look at all these hollow candles the last 2 or 3 weeks. And actually really going back to the low in mid-February. This whole move up, we've only seen about 3 or 4 filled candles in here. So very strong action, and that results in an AD line that's setting new highs. Volume has picked up during this period, and look at the relative strength versus internet. This is actually now one of the better stocks in the internet space. Pull back, watch that rising 20-day moving average. Fluor Corp, FLR, AD line breaking out. Look at the triple top coming across here. Just broke out on increasing volume, relative strength picking back up. This is in a strong group too, by the way. So anytime you get a stock that's in a really good area of the market and it's starting to show leadership, that's generally a good sign and a stock that many times you'll want to be part of. Nordstrom's JWN, 2 days in a row, just huge candles. I love these candles with increasing volume. Once again, move up. Relative strength was at a high. You go through a period of consolidation. Everybody writes you off. They get bored. Stock's not moving, whatever. And then all of a sudden, stock takes back off again. And that's what we're seeing here with JWN. Looks good. Let's see. LC, this is a Lending Club Corp. 3 or 4 really solid days in a row with very strong volume. AD line all of a sudden just surging to new highs. And look at that relative strength breakout. So Lending Club looking strong. Just a couple more here. How about Owens Corning, OC? AD line strong, sideways consolidation, just breaking out, good volume. And once again, look at the relative strength, 52-week high back in January when we set this high. But through this consolidation, we pulled back. Now we're breaking out again. Look at that relative strength line turning back up. SKX, this is Skechers. I actually bought Skechers. I love this breakout here. Sideways consolidation. I'm a big fan of the footwear group, which I think is starting to turn back up now. Footwear had performed extremely well into January. And at that point, we had a really nice relative strength line. Throughout the consolidation in footwear, you can see footwear relative to the S&P had pulled back, but it's starting to turn back up again. It's trying right here to make a breakout. If that happens, stocks like Skechers, Decker, Crocs, which is in one of our portfolios, Nike, they report later this week. I think all of these companies could do extremely well. I like the footwear space. All right, and the last one I have for you is Tilly's, TLYS. This is another one in the apparel retail group. Look at the volume picking up here over the last week or so on this breakout. After sideways consolidation, AD line strong, relative strength looking good. Again, can't really stress that relative strength line any more than I already do. Don't be upset when a stock loses relative strength when it's consolidating, makes a breakout, goes sideways for a couple of months. That normally is going to result in a period of declining relative strength, or in this case, Tilly's, we simply went sideways. But once we see another breakout, volume picks up, look at the stock outperforming again. So you want to stick with these leaders. And when they pull back, watch the rising 20-day moving average. All right, let's move on to industry analysis. So I want to talk a little bit about consumer discretionary because we've moved back up on the moving averages. I talked about that at the open when we were looking at the daily market recap. We clearly have now moved up above both of the moving averages, closed above them. And when I look at this, I'm going to annotate this for a second. XLY relative to the S&P 500. Now, you might look at this and say, well, we're just kind of coming up here and testing this low. We had a double top and we broke down. So this is probably going to fail. Well, if I had signs of a bear market, or if I had some real bearish signs out there, I would probably agree with that. And I'd be very cautious, the XLY. But that's not what I think. I think we're in a secular bull market, and secular bull markets have a history of being led by technology, consumer discretionary, and communication services, and maybe to a lesser degree by financials and industrials. Those 5 areas, if you're in a secular bull market, those are the 5 areas that I want to concentrate in. You're going to go through periods just like we've gone through here in March, where they go out of favor for a period of time. But I think that's an opportunity. Many of the stocks that pull back during periods like this, I think present tremendous reward to risk opportunities. So I think this move back above that prior low is a telling sign that the XLY is repairing itself. The fact that it's back through moving averages in a bear market, when things are starting to turn down, they don't come back up and go through moving averages. They don't come back up through relative resistance. They simply keep going lower and lower and lower. So I like what's going on here. I just wanted to mention this because I want to go through some of the areas within consumer discretionary. So overall, big picture, I like the group. All right, let's take a look at some of these groups. Now, I just mentioned footwear, but here is the chart. You can see a beautiful candle here on Monday, now back above 2,600, threatening the high we saw in January. We got the AD line starting to turn back up, but more importantly, relative strength turning up. Now, if we fail and we go back down and we lose this double bottom and relative strength drops below, then yeah, we've got a whole different bearish picture on our hands. But again, I'm in a bull market. I'm not anticipating bearish outcomes. I think that's the wrong perspective to have when you're in an uptrend. And I understand a lot of folks can't really get their arms around what's going on in the market and why we keep going higher. And, we're still way higher in unemployment and businesses haven't even reopened, or some haven't. And, you got a lot of question marks out there. I don't question the charts. The charts are telling me we're going higher. My intermarket relationships are telling me we're going higher. So I'm not going to look at these charts with a bearish slant. I'm going to look at these charts with a bullish slant. And what I see on footwear is an index that's been moving up, sideways consolidating 9 times out of 10, maybe even, 98 times out of 100. I'm going to be looking for this breakout here. I think we're going to get the breakout, the bullish conclusion to this chart setup. And if that's the case, then this is a group you certainly want to be looking at. All right, next up, I'm going to bring up recreational products. All of a sudden, recreational products, look at this move last 5 or 6 days, breaking out. So we went up, sideways consolidated for a while. You can see the relative strength was building into January, and then we pulled back. Again, you look at this and say, well, it's losing relative strength. Well, it's consolidating. So we've now gone through the consolidation period. We've broken back out to the upside, and look at the relative strength moving to a new high. Recreational products, I think, looks pretty good. How about restaurants? Talked about this recently, waiting for this breakout. Well, we got it. There's your breakout above 2,300 on the restaurant group. So you go down and look at the relative strength. We just moved to about a 2-month high on restaurants just as we're making a breakout. I think this is a group that looks really strong. How about clothing and accessories? AD line, awesome. Another one that had, topped in January, been sideways consolidating, a nice candle on Monday. And the relative strength just literally starting to turn back up. But if we get this breakout, we can get a close over 400. Clothing and accessories looks good. I'm not even bringing up all the best looking areas. I'm just bringing up ones that have recently broken out or maybe on the verge of breaking out. There's a lot of other groups here I think look very, very strong. Now, let me give you a couple that we've actually seen some pullbacks in. So one is toys. Now, you might look at toys and say, well, it's downtrending under the 20. The 20 is below the 50. This doesn't look good. Well, AD line, we're still near a high, number one. Number two, this pullback just happened to come back to this double top where we broke out from. I think we just tested support. Watch for toys to break above that 20-day moving average. If that happens, I think you're going to see a resurgence in their relative strength. The last one, and this is one that's been, just waiting and waiting forever, it seems. Of course, it's home of Amazon, but this is broadline retail. And broadline retail went down, tested that 3,000 level, and we have tested that now multiple times. So I think this is a long-term consolidation, but we got to get back through that 20 days. So this is one that still looks a little weaker to me. Look at the relative strength here. You see the difference? Everything's still pointing down. We're down near a 52-week low. This isn't just a pullback during a short period of consolidation. This is a lot of relative weakness given what the group, has been unable. Well, the group's been unable to break out, and it's been a long time. So watch that support level. I think the support level here is much more critical. And if there was an area that was going to break down, I don't think any of them are. But if there was one, it would probably be this one. I think this is definitely an area that we need to watch. All right, let's move on to earnings spotlight. I just had one or two stocks take a look at. HQY. Let me go ahead and pull up HQY. This is Health Equity. And we'll look at it quickly on a relative chart. But the breakout here occurred around 75. And notice we got a little flag pattern here, maybe even a bullish wedge, which has worked its way back to 75. The stock is down 2% after hours. They did beat 42 cents versus 41 cents, but 2% still is above that 75 level. I wouldn't be surprised to see a gap down and then a reversal back to the upside. As we've been pulling back, look at the AD line actually breaking back out again. I think that's a good sign. The other one I want to mention is VUZI. VUZI. This has stock been one of the better performers. They did beat 9-cent loss versus 11-cent loss. I think we got to move up and maybe a little cup here. Went back, tested the 50-day moving average, coming back up. So I wouldn't be surprised, maybe a little bit of a, period of sideways consolidation, maybe another test of the rising 20-day. But I do think eventually this is a stock that breaks higher. All right, let's move on to the three you must see. And I'm going to start off. These are all three Dow stocks that I think have really started to look better and better and better. 3M, big move up in late January. Nice candle, sideways consolidation, just making another breakout. Look at that volume picking up. I think 3M looks pretty solid. Next up, Nike. Mentioned the footwear area. Nike reports later this week. But I'll tell you what, 147, 148, that's a breakout area. I wouldn't be surprised to see Nike break out with earnings. If it fails, you do have great support down at 130 if it does go through more sideways consolidation. I believe we're going to see a breakout here, though. I think Nike still looks good. And the last one I want to bring up is McDonald's. With that breakout in restaurants, look at McDonald's. Over the past 4 months or so, we have really struggled. Haven't been able to get through 220. Well, we did it today. Look at the volume pickup. We still got sights set on 230. McDonald's has been an underperformer, but they are starting to show much more strength now. Need to get that breakout above 230, though. All right, that's it for me. I want to thank you all for tuning in. I'll be back on Wednesday morning over at Earnings Beats for your next Trading Places Live. That will also start at 9 a.m. Eastern. Everybody have a great day on Tuesday. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.